All right. We're going to get started as always with a little broad market outlook. We'll go over some top ideas, which can be very few because market's been smoked. And again, if you guys have any top ideas that you guys want to go over, definitely all ears for that. So main thing really is again, we have the Fed raising rates. We have the 10-year continuing its kind of perpetual uptrend it's been on since August. And as we've been saying in the last couple of newsletters, as the interest rates rise, as the 10-year rises, we should expect the equity markets to drop. If we think of like a seesaw or a swing, one side goes up, the other side goes down. And it's been pretty obvious. We see the 10-year running up. We see, the broad market, getting smoked. But the main thing here is just like when it gets the most extended, like when we saw what happened in June, and we think that this trend will continue forever, it eventually breaks that trend and pulls back, and then the next trend starts happening. This is again same thing again, 10 years up, dramatically in the past month or two. Looks like it will continue, but we're probably getting near the last legs of this run, just like we even saw with energy earlier this year. We had this dramatic uptrend. It looked like it was going to continue on, for the rest of the year. And just when it looked the most perfect is when it started to reverse, and we're seeing the continuance of that. So again, for the SPY, really this is kind of like the spots where if you're more actively buying some of these sectors outside of M1, buying the S&P back up through 371, it's probably a very low risk opportunity versus this low here, 361. But really, we need to expect this area to shake out. On the way, resistance on the way up, it's very easy for it to respect that resistance that hold kind of perfectly and then reverse. Where on the, because no one's afraid. On the downside, people are, not very confident when the market's near 52-week lows. So this is when people act rationally, they act very emotionally. So you should expect a more aggressive kind of shakeout down here than this perfectly holding, and we're buying back up through 371 versus 360. Probably not going to get that. And if we do get that, where this does hold, the bounce will probably not be as powerful. If it does hold this low perfectly, no one got shooken out. No one really is afraid. No one's chasing to get back in. So we might get a little bit more of a tepid bounce if we don't shake out. If we do shake out, then we can have, we kind of even saw this here. This was like the most recent shakeout that we could, see example of where, comes down into support, it shakes everybody out, and then it has that, more than 50% eventual retracement. Where if this was to have held perfectly in this area, you'd probably get that bounce to like the 400 area and it rolls back over. So definitely kind of hands off right now. We want to wait for this shakeout to occur. Again, we see energy leave its stage. We were talking about this transition like a flag, and it's breaking down. It's a big avoid. Telecom, again, continues to be a huge avoid. And every other sector out here just waiting for the shakeout. Small caps coming into the retest of two lows. We saw REITs break it. And this is that same, this is that example now. Now that it's shaken everybody out, we want to look to buy back up through this prior support area that for now will act as resistance. So this is that shakeout. Maybe it has another day even further, another day lower, and maybe even get like an 84 entry. But this, we don't want to be too early to this buy, because now it's in, new territory. It's in, it took up its 2-week lows. We don't really want to chase it in a new lows. We want to just wait for that time to, buy in the right spots, even if that means paying up a little bit, relatively speaking. But again, I'm not going to go through every other sector. It's kind of all the same. Most of these sectors running into their prior support, other than the utilities that are still in the upper end of its range. And again, that's just a flight to safety sector. So that's not too surprising that the sector is still kind of holding up near highs. Only two main ideas on my end are this VRTX continues to flag up here, seems to not really care about what the broad market's doing. There's very strong name top right, plenty of higher lows, very tight entry versus the proper exit. And this Netflix, I think that in time, in the next year or so, this Netflix into this gap, it's been a pretty decent gap. Pretty decent base that's been forming for the past few months, and a decent gap when it does push through 250. The gap fell to at least 330, and then the eventual run up back to these highs, which may take, a year or two, but definitely keep an eye on this Netflix, keep an eye on that VRTX, and other than that, just continue to buy the broad markets daily using M1. So if any of you guys have any top ideas you want to talk about, this would definitely be the time that we can do so.
Do you hear me, Ben?
I can, yeah.
Okay, cool. I just had a question for Netflix trade. Are you looking to get back in, or are you still in from the last buy? I don't remember either.
I did get shaken out. What was this? So yeah, we got it. I took a trade Netflix. Someone else was in it with me as well. I bought up to 220 versus 215. I had gotten tailed out right underneath this low, right here. And that was again, someone you might have asked the last week as well. Was not in it for this move to 250. That was again trying to trade this range. That was the goal. And now it's more likely needs to probably shake this area out and then find that next proper entry. But I don't want to chase this into support. That's kind of like I was trying to articulate the picture. We don't want to step in front of the train. We want to let that train go by and wait for the next opportunity. So I don't want to try to bottom pick Netflix this time around. That this was like a watching it as it kind of came into support and held and turned. It was very lowest entry. It's coming back down here again. I don't want to step in front of that train. Let it shake out this 220. Let it set back up, do what it has to do. And then when that time is right, maybe I can try to sneak back in again. But the real entry is going to be through this 250. It's now, it's had its third attempt. And each subsequent attempt, has a much higher probability that it should continue higher. So keeping this more on the radar, but again, not trying to buy this as it comes down through the support area. All right. Anybody else? Any top ideas?
I'm also looking at Microsoft on your list.
So Microsoft was a failed support buyback, and this kind of goes into me, I guess, stepping in front of the train too early. Where I was trying to buy up through this 240 area, 245 versus 240, was just too early. And now that it's shaking out, that's great, and just needs we need to let it flush lower, and then when it is ready, just wait for that buyback back up through this 245 area. It clearly hasn't been able to break this area the last couple days, but I'm not trying to fight this the whole way down. If this wants to go down to 200, let it do its thing. But 245 is kind of the spot I'm keeping on Netflix. That will be, I'm sorry, Microsoft.
Yeah.
But again, I took the shot in that trade off support. It didn't work, but I'm not going to keep fighting with it. It's that was the feeling loss was like a $2 loss. The main position loss was a $5 loss. I'm not going to keep fighting this name if it wants to head lower.
And just another question with the AZN, AstraZeneca. Was it for a long or a short?
Was Microsoft a long or a short?
No, AZN, AstraZeneca, AZN. Yeah, that one.
Okay, so this was again trying to buy this breakout.
Okay.
This time, AZN looked phenomenal. Top right, very tight risk. $2 risk here looked phenomenal. And then we decided like that, I forgot what the news was, market related that following day, that everything just kind of got smoked. And I was getting it versus this out versus 64. And in the moment, felt like a horrible trade because I'm really bought the top and then sold as it broke support. But now you look at it, basically a month later, and or at least for me, it's like, I'm glad I got out at this time versus getting stuck in the name for it to drop. And that's similar with this Microsoft. I tried it didn't work. I'm not gonna keep fighting with it if this is what it wants to do. Like if it wants to break support and continue down to 200, all for it. I took my attempt in it, didn't work. On to the next thing.
I had another question, more general question. Since you don't short too much, from my understanding, if the markets keep falling, you're just waiting on the sidelines, trying to find the relative strengths, or what do you recommend doing?
So I don't short at all. even, you know, and I can't really speak for Shake, but even a majority of his trading is going to be to the long side. It's way easier. Even for right now, people want to short. Well, you are, and I'm not saying you specifically.
Hmm.
The idea is to short. You are so late to this short. You know, the market's down 80 points off its recent high. And now it's like, what can I short? It's like, well, you're too late. That's like trying to, if the 10-year was a chart, was a stock, and you could actually buy it. It's like someone's like, I want to buy the 10-year today because it's going to continue higher. It's like,
Yeah.
all right, man, like the game is over. Everyone's in their cars driving home, and you're coming in the stadium trying to watch the game.
Yeah.
You know, and that's when it comes to shorting. That's when most people want to do it. It's when they're so late to the overall move. Like if you would have said up here, like I want to short, it's like, okay, that's insane. Like you're just trying to short a top. But if you're like, I'm going to short down through lows when things start to roll over, like right here, down through this 410, it's like, okay, that I can get behind that. And then you have this potential upside, obviously to the downside. But
Yeah.
down here, it's like, okay, you want to short down through 360. Maybe it goes to 350. Godspeed. I'm going to buy 360 or buy 370 and try to hold it to 460. And I can risk 10 points here or 20 points and make 100 or make 80, where you're not going to short. And again, I'm using SPYs, you know, this example, like you're not going to short 360 and it's going to go to 200. Like you're not going to get that move from here because you're already 80 points late. So broadly, again, I think for most of us, the last 2 years post pandemic, we had a very easy. My screen is just freezing. I'm trying to show the broader trend. We had a very easy 2 years in the market where every day there was pretty much opportunities. There wasn't really extended periods of time to kind of do nothing and sit on your hands. And again, the market always wants to teach us lessons we don't want to learn. And when you have 2 years of a market that just goes up, you get very used to there always being opportunities. This year, obviously, it's been the opposite of that. We've had very few opportunities and a much more difficult market because the trend is obviously heading lower. So being able to actually sit on the sidelines and do very little other than the more passive long-term stuff, that's why, like even for me, this past week or two, I probably traded more than I have than the entire summer. I took Microsoft, I took Costco, or Cisco, I'm sorry, Netflix, this AZN, Pepsi. I've traded a couple of these names, made some money here, broke even, you know, there, lost some money in Microsoft. Not a big deal because for the last 3 or 4 months, I haven't been doing much on the active side because there hasn't really been much there. Sitting on my hands and sitting in cash was the best thing to do because the account is performance-wise stays at 0% when the market's down 15. So it's like, do I want to fight with the market and be down 10 to prove a point, or can I just be patient and sit in cash and my performance actually is better than the market because I am just waiting for those right opportunities and taking those little shots when they present themselves, but not having to force myself to find something just because the cash is kind of sitting there.
Yeah. But I'm just thinking out loud in the sense that if we're in a downtrend, confirmed downtrend, and of course not now exactly on the day to short because it would be late, but if we even if we come back up a bit and then we go down, wouldn't it be easier to be on the short side than always trying to find longs for really short period and you have to time it really better? I don't know if you see what I mean.
I would disagree. Mike, again, if you have to flip flop consistently between finding a long and a short every other day, you're constantly flipping back and forth on these ideas. And there's very small periods of time where shorting actually makes sense. But again, you missed it by a month. You're like, again, so it's like try to name one short right now that you'd want to take, and you probably don't have one. So it's like you're I don't want to say you're fantasizing, but like you want the short because the short sounds exciting, but there's nothing there to, you know, like if you told me the weakest stock right now, like if we went into small caps and I would just put like the biggest percent loser of last week, like on Friday, if you want to short this FTCH, again, we don't really short these cheap names, but if this is the chart, Yeah, go nuts. Short distinct through lows. Like this is what you want to do. You know, this is a weak stock down through $8. If this was an $80 stock down through 80, you want to short down through lows, go for it. You know, it's a weak stock, it's bottom right. This is what you want to look for. But you probably don't have a margin account. So you can't short anyways. So it's a wasted conversation. You're not going to buy puts. The puts are going to expire worthless even as the stock breaks through support. So you can't do that. And if it does break through 6 and then turns back up, you probably have better risk reward just buying it versus that shakeout low and catching a bounce and then trying to perfectly time that short. So again, you probably can't short anyways. And it's just something that most people in the beginning, again, this prime, another super weak stock. If you want to short through lows, this is the entry. Short exit, like as support breaks, major support breaks. That's a great short. But are you going to short 20 and you're going to hold this thing for a month as it drops to 10? Probably not. You're probably going to short 20. You're going to hold it for 2 or 3 days and you're going to get out. And then a month later, you're like, damn, I would have made 50% if I held that short. And that's a lot of times what happens when you short things. You don't have the patience to hold them as you would with a long, because you're not going to get bankrupted if the stock goes to 0, because then you just lose the investment. If this prime you shorted at 20, it goes to 100. You know, you're in a bad spot. So I keep it very simple. I'm not trying to force opportunities. Stocks are going to fall all day long. I don't need to be involved in every single stock that falls. And they always fall and look way more obvious after the fact than they do in the moment. So if you could tell me right now what stocks at 52-week highs and 3 months going to be at 52-week lows, that's a much harder thing to say than this stock's down 50%. It's such an obvious short now. It's like, yeah, no shit, because it's down 50%. But you didn't have that idea when it was up 50% and you were trying to get involved when that was the smart time. Now it's just too late.
Okay.
All right. Any other final questions before we wrap this up? All right, guys. You guys have a good rest of your day. Again, any top ideas, post them in the chat. And we'll talk next week.
All right, Ben. Thank you.
Take care.
These are the big
Peace.